Topic 2 of the CAIA Level 1 curriculum introduces the foundations of alternative investments and explains how these assets differ from traditional investments such as stocks and bonds. Candidates study a broad range of alternative asset classes, including hedge funds, private equity, private debt, commodities, infrastructure, intellectual property, and real estate. The curriculum emphasizes the role of institutional quality investments and explains how alternative assets can enhance portfolio diversification, improve risk-adjusted returns, and provide access to unique sources of return. Candidates also examine the evolution of alternative investing globally, particularly in the United States and Asia, and how institutional portfolios increasingly incorporate alternatives to meet long-term investment objectives. The curriculum highlights the defining characteristics of alternative investments, including illiquidity, active management, inefficient markets, and non-normal return distributions. Candidates learn how alternative investments differ from traditional assets because they often involve specialized strategies, leverage, complex legal structures, and less transparent pricing mechanisms. The topic explains the concepts of efficiency and inefficiency, demonstrating how skilled managers may exploit market inefficiencies to generate alpha. The curriculum also discusses the role of arbitrage, diversification, and absolute return strategies within institutional portfolios. By understanding these characteristics, candidates gain insight into why alternatives are frequently used to enhance returns while reducing dependence on traditional market performance. Another major focus of Topic 2 is the structure and organization of alternative investment vehicles. Candidates study legal entities such as limited partnerships, special purpose vehicles, master feeder funds, and open-end or drawdown fund structures. The curriculum explains the relationship between general partners and limited partners, including management responsibilities, governance provisions, and fee arrangements. Candidates also examine fund documentation such as partnership agreements and private placement memoranda, which define investment objectives, risk disclosures, and investor rights. The curriculum further explores concepts such as carried interest, hurdle rates, high watermarks, clawback provisions, and waterfalls, demonstrating how compensation structures influence manager incentives and investor outcomes. Topic 2 also develops the quantitative and analytical foundations necessary for evaluating alternative investments. Candidates study return calculations, internal rate of return, IRR, modified IRR, and performance metrics such as TVPI, DPI, and PME. The curriculum explains the limitations of IRR, including reinvestment assumptions and challenges associated with complex cash flow patterns. Statistical concepts such as variance, skewness, kurtosis, correlation, beta, autocorrelation, and regression analysis are introduced to help candidates interpret investment risk and performance. The curriculum also examines issues such as survivorship bias, data mining, and backfilling, which may distort empirical investment analysis and lead to misleading conclusions regarding manager skill and alpha generation. Derivatives and risk management concepts form another important part of the introduction to alternative investments. Candidates study forward contracts, futures, options, swaps, and option pricing models, including Black-Scholes and risk-neutral valuation techniques. The curriculum explains how derivatives are used for hedging, leverage, speculation, and portfolio management. Candidates learn about risk exposures such as delta, gamma, theta, rho, and vega, as well as measures of portfolio risk including value at risk, VAR, conditional value at risk, CVAR, drawdown, and downside deviation. Benchmarking, performance attribution, and risk-adjusted return measures such as the Sharpe ratio, Trainer ratio, Sortino ratio, and Jensen's alpha are also examined in detail. Overall, Topic 2 provides a comprehensive framework for understanding the purpose, structure, risks, and analytical techniques associated with alternative investments. The curriculum combines qualitative concepts, institutional practices, quantitative methods, and risk management principles to prepare candidates for advanced study of specific alternative asset classes. Emphasis is placed on diversification, efficient portfolio construction, active management, and the role of alternative investments in modern institutional portfolios. By mastering these concepts, candidates build the foundation necessary to analyze complex investment strategies, evaluate manager performance, and understand the evolving global alternative investment landscape within a professional and institutional context.